Hello, traders. Gary Wagner with the Gold Forecast here, 10 a.m. in Honolulu, Hawaii, Monday, the 18th day of April. And this is the Daily Report. We do have gold trading higher this morning, currently trading at 1496.44. This all in reaction to the fact that S&P downgraded U.S. debt. And that is something that is very, very significant. We've not heard that in the marketplace. And we've heard it with Greece and we've heard it with Ireland, but we've never heard our own credit rating go down because of the massive amounts of debt that we have been piling on. We are looking at a market, of course, right now that, in my belief, and you know this is nothing new, but that I think is destined to go to 1500 initially. 1508 was my target. Now, unfortunately, for those who took my stops last night, we did in fact got stopped out. To recap the trade, we got in at around 1457, somewhere right around this area. We were able to ride that market up. But what happened last night was, as I was watching this market trade higher, it formed this top here, and then I witnessed the market begin to come down. I felt it was most prudent to move our stops up. You see, there have been times when the market has fallen $40 or $50 on a profit-taking round, and I did not want to have us experience that kind of a drawdown when we had nice and sizable profits. Now, in hindsight, do I wish I had moved that stop $1 lower? Absolutely. The fact that the stop and the low of the market came to it about the same place is not something that I'm very happy with. So, what is our game plan? Well, I personally think that the market's going to 1508 on this last leg. We're going to look at our Elliott wave count, and we're going to look at the minor count today so we get more of a sense for where we think this market could go. There is going to be a point also when we go from that 1, 2, 3, 4, 5, in other words, the impulse part, into the corrective stage. And so we will have quite a few opportunities to get back on this horse, so to speak. Traders, you probably recognize this, but it might look a little strange. This is our daily chart with Elliott wave and channel lines. Now, what I did this morning is I converted it to a 162-minute chart so I could put in the real minor count. Now, we can see two sets of lines, one set in blue and one set in black. And of course, the one in red is what we're calling our major count within there. So we've got, this is wave 2, start wave 3. We have a 1 count, 2, 3, 4. And as I said, I believe that we are in the 5th wave currently within this wave 3. However, if you follow Elliott wave, each Elliott wave can be broken down into a minor, and then you can move yet another step back, which is what I wanted to do this morning. And as I said, the way that it was accomplished was by moving it down to a 162-minute chart. So therefore, what you're seeing, they won't match up exactly unless I convert it back. But this is what we're looking at. In terms of our minor count, what we want to do is, as you can see, this wave 1 right here is broken up into 3. 1, 2, and 3. Then we have A, B, and C going down, and then a count of 1, 2, 3, 4, 5, and then our A, our B, and our C, and then we have 1, 2, 3. So on a very minor count, we're still going to get one more down, and then our final 5 up. That's in the smallest of the counts itself. So the reason that I bring that up today is that in terms of a strategy to re-enter the market, we're going to want to look when this market dips right in here, this very, very small subwave that we're looking at. That should provide us with an opportunity to participate in the last of this impulse set of waves moving up as it's part of 5. Now, the good news is that after we go through this 3 and we get our major corrective 4, what will happen is that we will have one final strong impulse wave to the upside, wave 5 within wave 5. Now, when I go ahead and compress that chart back, you can see these are these subwaves right in here. And the one thing that really holds true to me is when we consider this wave 3, realize in terms of what I like to call amplitude, in other words, where I think we have in terms of potential, I still believe that this wave 1 has to be, by the nature of Elliott wave itself, wave 3 has got to be at least equal to, if not greater than, that particular wave. So when we take a look at this wave right in here in terms of the amplitude, it takes us, of course, up to, in terms of equal strength, right above 1500. So, as I said, my belief is that we should have an opportunity still to re-enter the market on that particular dip that we should see as this minor set of waves works itself through. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange.